Most times we recommend that you buy your first property in your name. The error though is where I think the flat rate scheme is a scam.
Yeah.
HMRC, come for me if you want to.
They're now going to be utilizing AI to cross-check our self-assessments,
Using it against
our
us.
tax returns. They're going to be monitoring your social media with AI
Yeah.
to make sure your tax return matches. You've claimed £24,000, but you've just bought a new Rolex and you appear to have spent a month in Dubai. What are your thoughts on that max exodus of the entrepreneur?
Honestly,
And we are back. Another episode of the PBK podcast. Now, this week, we have accounts, tax, finance. But it's not a bad thing because you're going to help us save ourselves money as business owners,
hopefully.
understand how to not make some of the most common mistakes, and also learn about the mistakes people make so we don't have to.
Yeah.
Now, I'd like Miss Benedicta Egbeme. How's my pronunciation?
Perfect.
Hold on, I could, even when I say I'm going to have so much fun saying your name today. So much fun. Firstly, how are you?
I'm good, thank you. It's been an interesting year, but it's busy.
Yeah, I mean, it's an interesting year as a whole. Now, obviously, I've already mentioned, like, you know, the field that you're in. I have a love-hate relationships with
So do I.
accountants because I have a straight hate relationship with taxation, but love-hate with how we get there. Because I'm like, but I'm sure my gym is tax deductible. No one ever agrees with me. No, even though I'm focusing on this aesthetic right here. No. So for those that are not familiar with you, I always think I do people a disservice when I do their intros.
Okay.
So can you give us an intro to who you are and what you do?
Cool. So I'm Benedicta, founder of Benny Ratio Finances, qualified accountant. I call myself a finance professional because even outside of my business, which is obviously accounting, like 9 to 5 wise, I've always worked in finance. So I've never like not done finance basically. So love numbers and all of that. But beyond the numbers, like with the business, is helping people. So set up Benny Ratio Finances, obviously using my education, but bringing it to the social media streets for the everyday person. I think for me, it's all about simplifying things. Like you can read a whole long paragraph, text and, you know, whatever. But I want to be able to just communicate that in simple language. Like, okay, so you basically mean this plus this, you know, rather than talking about debits and credits, which is what they teach us as accountants, you mean plus and minus.
That's
add,
still always,
subtract.
by the way, till this day, like when I look at that, I've always got to remind myself.
Yeah, like what's a debit?
Like when I look at, like, for example, take it as your British gas bill.
Yeah.
You're in debit. Who owes who money?
Exactly.
Because if you owe me, pay me. And if I owe you, stop sending it to me.
And also, like, I don't understand why they do that. Why can't they just use normal English?
It's like, okay, so I'm in debit, but then I've got to think debit card, credit card. I spend money on both of them. Like,
exactly. And debit card is your money, so that's a good thing. But then debit in like a bill is not a good thing. It means you owe. Yeah, it's really confusing.
Okay, so is there any hacks? Like, how do we just, even that as a starting point, get around that?
I'm honest, you just got to memorize it. I just think, credit is just like credit. I'm giving you a credit on your account. So I just think plus.
Yeah.
So I start with the credit because I think about the positive. So therefore, if the credit's the plus, then automatically the debit's the minus, basically. Yeah. But I don't get why they call your debit card a debit card. But anyway.
Yeah, because then it confuses you because they're like, well,
that's your own money. And they tried to make it seem like the credit card is a good thing because it's I don't know.
It's mind games. Mind games.
Yeah, because they want people to borrow and pay interest.
Mm.
And they don't want you to spend your own money. They want you to feed them.
But listen, you've done your intro, but I'm not happy with that intro.
Okay, sorry.
No, like you got to talk like.
What else?
So you said 15 years in the industry.
Yeah.
Worked at, you know, some of the biggest and baddest.
Top 4 accounting firms. Probably not the best times of my life, but I did it. I made it. But actually I worked in government for a good number of years. Project accounting. What else did I do? SEMA qualified. More recently worked in insurance companies. Not insurance, don't think home insurance and car insurance, none of that. Specialty insurance, like the creme de la creme of insurance industry. So yeah, it's finance through and through, basically.
And off the back of that, like, you know, give you a credit, flowers. spoken BBC.
Yeah, BBC
Millions of views
reached out to
online
me.
for various different platforms.
Yeah, so through Benny Ray Show, I've definitely spoken in a lot of places and reached a lot of people. Like you mentioned, one of the, I don't know if you've had Atto. Do you know Atto? You must know Atto.
Yeah.
You've
Wallet.
been on his
it's
his
my
show,
guy,
exactly.
man. Good guy.
So we did a podcast 2024, early 2024. And that's the one
that was the one that went viral. Because I remember looking at
just
that.
Went boom.
And I said, and I thought, how she made tax so like a sexy thing that everybody's because he's got people talking about this is how I made my first million, this is how I did that, this is how I became a professional footballer. And then the tax episode.
Do you know what? I'm not gonna lie. So I'm a Christian. The Bible says time and chance happen to them all, right? And I think that it was a combination, obviously, of everything I was saying. Yeah, I'm amazing. But do you know what? I think it was a timing as well, because there was a lot of changes around that time as well, like even with in the UK government, all the budgets and stuff like that. So I think the combination of what was being said, the timing, I think the two just exploded.
Yeah.
And to be fair, Atto is a really, really good interviewer.
Yeah.
He asks the right questions. He knows how to.
Yeah, no, he knows how to. Do you know what? And he is. You're going to see today, I'm not Atto. You're not I just this, to be honest with you, and I love all you guys that watch this, but there is a selfish side of this. For me, this is my opportunity to sit down with somebody whose hourly rates is going to be in the hundreds for free, by the way. And then also it's my personal therapy to be like, oh, you're struggling too.
Yeah.
We can bond over that.
No, I hear you. I did a similar thing. So I actually had my own podcast. I didn't keep it going, but it was a similar thing. I was like, do you know what? As an accountant, I talk to business owners all day, every day. And so we have so many shared things like business, staff, tax, all of that kind of stuff. And so I was just like, do you know what? This is for me. I just want to talk about this in an open space. I'm not trying to make any money from it. But yeah, I hear you on that.
Oh, for sure. Well, we're going to try and ask some good questions because I've got my cue cards branded. Look at this, so professional. But we're going to throw these away for a second because I'm going to ignore those. My starting point actually is obviously this is a business podcast. It's, a life experience podcast, but more centrally, it's a property related podcast. Of course. Now, from my understanding, people in the property space, from a taxation side of things, generally are quite a focal point when it comes to audits and oversight. Like, as property investors, what are some of the biggest mistakes you kind of seen people make? Yeah,
so I think before I talk about the mistakes, one thing I will definitely say about the UK, which we all know, is that we're crazy about property.
Yeah,
must own, and you have a whole country that is so fixated on owning a property, buying your first property, all the laws and all that. Like if you go to other countries like Germany, like European countries, it's actually normal for them to rent for like the majority of their lives. And in fact, when you try to buy in those countries, they make it very difficult and very expensive. Things like you buy a house, but you don't buy the kitchen. People carry their kitchens with them. Like some strange, my brother lives in Germany, so I have a little bit of insight.
That just sounds very German.
Yes, it's very German. And there's just like very random things that they do, which make it very hard.
I like the idea of it. I've had some kitchens that I would have liked to take. I could have said, yeah.
But the stress of unplugging and anyway, anyways, in the UK, we're obsessed about it. Now, for as much as we're obsessed about it, there's also this kind of, you've got one, but I don't. So I want to try and pull the next person down, or more kind of like, okay, you can have one, but we don't want you to have too many. And so this is where they try to do this thing of cutting. To be fair, the whole UK economy, not just with property, with anything, your income as well, which is why we have the tax system that we have. It's like, okay, we're happy for you to have something, but we don't want you to have a lot. And yeah, just a little bit to survive. That kind of in prison, they just give you the basics. Basically, you're not going to die, but you're not going to get fat either. So it's that kind of thing. And so when it comes to property in particular, why landlords, buy-to-let investors are like the ones that the government go for. It's like, you guys are preying on the poor. You're preying on the people that can't afford to have a property. Well, first of all, that's not the landlord's fault, but that's by the way.
Because if you hit your targets
you
in
would
relation
have one
to
just
new
as
homes,
much, right?
Then
just as well.
supply and demand wise,
Exactly,
they would
it should
go
match
down.
up.
The only reason ours are going up so much is because you're failing.
Exactly. And so rather than attend to the matter that needs to be attended to, i.e. if you want to provide free accommodation for everyone, then provide it or whatever, it's easy to go for the big guns. And you see governments, particularly people like Labour, and no shade, but you want to go for the headlines that will get the masses.
We're going to have to ask you to vote for later on.
They want to get the headlines that go for the masses. And it's easy to be like, yeah, we're going to tax the rich. We're going to tax the people that have loads of property. And we're going to bring all that money and give it to the poorer person.
But I think it's like very much, this is the thing that I think is the red herring. Like, they make it seem like we're going to tax the people that have loads, but actually we're going to tax the people that have a bit more than you.
Yeah.
But the ones that have loads, they've got all of the, theirs are owned in a foreign subsidiary and don't own it. And it's, they don't technically take any money out. So we're going to tax the people who you've got access to, who we want you to not like, but leave the minorities and the really extreme wealthy, property owners. Because as much as you see in the headlines, landlords are mass exited in the market. These are like landlords that boyfriend had a property, girlfriend had a property, got married, rented one out.
Yeah.
That doesn't make sense
They're
anymore.
not they're not like seasoned investors, basically.
Like you still see in this market, John Lewis, Barclays, they're buying up homes in the hundreds.
Yeah. A lot of people are diverse. A lot of retail people have diversified into property. The thing is though, regardless of the UK, whatever country, regardless of the tax system, even from the ancient times, to be fair, land and property has always been the place to either make money or retain money anyway. So it's, to be fair, it's not really a new thing. I just think that the attention from a political, playing the game, all of that kind of stuff, headlines, blah, 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 it's easy to just target that. But it's always been. It's
all like from the dawn of time, from if you're, like I did history as one of my A levels. So you look at propaganda. Like any time it's like, oh, there's focus on the government. Like, there's things that we're at almost 100% debt, for example.
Exactly.
So it's like every time there's all 100% debt, all of a sudden there's conversations around immigration, landlords and abortion, because they're the go-to things that are going to get everybody riled up. And
angry and all of that.
You're going to forget about everything that's going on in the rest of the world, all the geopolitical issues that are going on everywhere, because all of a sudden, actually,
it's
protect
just
our borders, no landlords.
And no one's thinking about what they're really doing. Anyways, let's not go too far.
We get cancelled before we've even got started.
Before we got started.
But no, I think look, that's why I say like these kind of conversations, just for people to really get a better idea, because ultimately, I'm not telling everyone, I'll go and be a martyr, go and start, campaigning for everything. But what I'm saying is protect what's yours and have the reason I get people like yourself on, people with the experience, with the expertise, is understand how to best position yourself to look after your own assets that you've worked really, really hard for.
Yeah. And you know what? I will always say, as much, and I'm sure we'll go into it, but as much as the tax system might look negative, because to be fair, rates always going up and all of that, like we just mentioned, property, land will always be the one thing that tends to go up over time, or that allows you to retain wealth and that can be transferred. And so regardless of even like the negative statistics, which I think are also trying to put people off, I think, like you say, with the right information, you can actually go in and make it work for you. So you don't need to be put off.
Yeah, I think that's it. Like if you look at anything, if you look to go in to get your degree, people are going to tell you, well, it was only like £300 a year when I did it. Then it was only £1,000. It's only £3,000. And it's always going up.
Yeah.
But you've got to find a way to make it work for you. There was a point in time where there's no such thing as buy-to-let mortgages. There was a point in time where interest rates were at like 0%. There was a point in time where you could put in a 0% deposit. Just because none of those things are in place now doesn't mean that you can't still operate.
The game is not over.
Yeah.
The game is not over. And you know what? As Tayo will say, I'm sure you know Tayo, you've probably had him on the show, whatever. The next best time to buy is today. Because if it's going up, then you want to get in now before it goes even up even further. So...
And especially like if you can buy at the right price, you can structure the deal in the right way. You can, I think we're going to talk about this, but also if you buy with intention, as opposed to, I just want to buy because my neighbor's buying, the person across the road is buying.
I've definitely seen people where they've bought hurry to be like, yeah, I want to get on the property ladder. And they've just gone and bought, yeah, okay, the house is nice, but maybe the location is rubbish. The increase in value is actually not really there. So as much as generally property will go up over time, obviously some areas will go up more than other areas. And so, yeah, I've definitely seen where people have made such mistakes where they've rushed to go and buy, or they've gone and bought a flat, a leasehold, and then now it's causing them issues, all of that kind of stuff. They didn't really understand what leasehold was versus freehold, all of that kind of stuff. But it all comes down to knowledge and research, right?
No, for sure. So, okay, so in terms of like the property side of taxation,
yeah,
like, you know, there's double, triple, quadruple taxing.
Tax
like,
all over.
I guess, are there any things that you can advise or like, you know?
So the number one thing I would say, and the number one mistake I see that people make is they buy. So most people, and this is obviously everybody, I will caveat.
You have to,
everybody's circumstances is different.
my
Get
favourite
advice. Make sure that you know your numbers, your situation, and all that. But generally speaking, it is recommended that most people will buy their first property as a residential because obviously you get the benefits. You can put a lower deposit. You can get lower interest rate. Obviously, most times it's the house that you live in anyway. Again, there are exceptions. There are people who just go and start investing and they're happy to live at home or wherever they live. So most times we recommend that you buy, you know, your first property in your name. The error though is where people go and buy a second property in their name as well, or they're now trying to convert their first property into a buy-to-let. So I would just say for all the benefits that you got for your residential, for your first time, just keep it, yeah? The second property should be bought as a buy-to-let. Now, there may be reasons why you don't buy it as a buy-to-let, but ideally, if you want to be tax efficient, you want to buy it for a buy-to-let, especially for a limited company, not just buy-to-let. So buy-to-let mortgage, but via a limited company, especially if you're planning to, number one, continue along that line, or you're planning to like reinvest the profits that come from that. It's always best to do it in the wrap of a limited company. So a limited company will allow you to pay the least corporation tax or the least tax, especially if you as an individual are a high rate taxpayer. So what's a high rate taxpayer? Anybody who earns personal income over 50K, 50,270 to be precise. But basically, if you already have a salary that's above that, and then you go and buy a buy-to-let, all the income that comes, and by the way, there are deductions that the government have also taken away, but you know, all the income that comes is basically going to be taxed at 40%. It's like, what's the point of going through all that stress to then have your money taxed at almost 50%? So with the limited company wrapper, you get to have your tax at 19%. That's one of the things that people miss. Like I've met people who have got like 4, 5, even 6 properties all in their name. Yeah, it's not tax efficient.
Yeah, in the slightest. And then like you said, with the changes in terms of what you can claim in relation to expenses, interest.
Yeah. Unfortunately, both sides, whether limited company or personally, the government, again, they're always changing up things. You can't claim for this, you can't claim for that. There used to be like furnished holiday lets that they used to be able to treat as a business, and they've taken that away now. They're just saying it's not, it's just a property. And so you're subject to the same kind of tax and all of that every other person is subject to as well.
So it is a lot. I guess my second question following on from that is like, there are some of the mistakes that people make. But in terms of how property investors and developers can help structure their businesses in the most tax efficient ways. Obviously, I know caveat is going to be different for everybody.
So yeah, I think the advice I'd give in this space is not necessarily even about the structuring of the deal of the property, actually more about how you manage the business itself. So for example, things like putting your family members on is a very easy way. I don't see why someone's married and their spouse is not. I don't care whether your spouse doesn't do anything to do with the business. They should be on the business just from a paperwork point of view, because there are benefits. You know, you can draw out money via both of your names, for example, and especially when or if one spouse is not working, you know, they have more tax. I won't go into all the numbers, but yeah, there's more allowances basically. But even beyond that, you know, for those who are older, who've got children that are old enough to put on as well, and not just put on in terms of directors, but even paying them to do stuff. Because
I saw that you can from like there's as long as you can justify
what they were doing,
age limit in
exactly.
terms of...
And the good thing about kids as well is that they probably don't have another job, so most of the money that you're going to pay them is going to be tax-free anyway. And obviously, depending on how well you trained your children, that money could potentially also come to you as well.
Yeah.
You could just use their name on paper to draw it out in a more tax-efficient way, but that's money to your household.
Yeah, or even like they can, you know, if they start putting money in an index fund from the age of...
Exactly, so they can start investing
12.
early. Rather than you as a parent putting it in, make them work, you get a little bit of benefit, make them work for it, they get the money, and then they're investing. So
Exactly, and then they don't have to come to you to buy their first home because they've already saved up their deposit.
No bank of mum and dad, they got their own bank.
Exactly, full cycle. And that's when we talk about, and I think when we talk about generational wealth, it's really understanding those intricacies of how do we not just earn money, but how do we protect money?
Exactly.
And that's why I really wanted to get you on, because we spend so much time in this property space talking about, oh, if you buy this, flip that, do that, turn it around, that's a house, you make the money.
Turn it
but
around.
cool, you've got the money now, but you've got the gross. That, you know, you haven't really seen your true net if you don't have the most efficient structure. And again, if it's some of it's out of your wheelhouse, because obviously we're very property focused, just let me know.
Okay.
But like, in terms of structure, I see a lot of people talking about the benefits of like group structures, particularly because some people are flipping properties where they're trading them versus having a buy-to-let income versus maybe an area where it benefits them to be VAT registered or not benefits them. Do you think there's a lot of value in the group structure?
So the thing is about the group structure you have to be careful about is that from what I've seen, and you might be correcting me in case I'm wrong, but for example, when you're talking about group, I believe you're talking about like a parent company that owns another child company, right? And those individual companies are buying, and one might be doing like service accommodation, the other one might be, flipping properties. So a couple of things there. If you're going to have a parent company of a company down here, if the owner of this company is not a human being, it's harder to get a buy-to-let mortgage. Because what they want is an owner of a company that's a human, like an individual. So they want to say, Benedicta owns this company. Okay, we will give her a buy-to-let mortgage for what she wants to buy. I've definitely heard people say that, their broker said that they couldn't do it because the parent company was a company.
Even that, and like some buy-to-lets, I can't remember who it was, don't want to name them in case I'm wrong. But like they don't allow intercompany loans. Exactly.
So they don't want to see. So basically, without going into technicalities, the group structure is good, but I find that most times it's better to stick on that parent company after you've done a lot of the buy-in, if that makes sense. So if you're still in a position where you're relying on funds from the bank, then you need to make sure that actually the parent of your company the owner of your company is a person. But if you're in a position actually where you probably don't need funds from a bank, maybe you've made enough already, then definitely with the parent company, because then you can move money around and nobody's going to come and question you because you ain't asking anyone for money anyway. So that kind of structure works. The other thing as well that I would just say about these two down here, so one of my customers recently, we just helped them to open up a new company because they had a situation where they're in property, they've got service accommodation, they're doing buy-to-let as well, all in one company. But like you say, because you mentioned about VAT, they've gone over the threshold. And so we had to split out the service accommodation bit from the buy-to-let bit, because obviously buy-to-let, if you're long-term renting, you don't charge your customers VAT.
Yeah, exactly.
But if your business is registered for VAT, technically you have to charge VAT on all invoices. Exactly. So we had to split that out, so that I would say is a good thing. Obviously, caveat, if you've got two companies, two sets of accounts, two sets of admin, two sets of everything. However, it could save you, especially because VAT, of all the HMRC teams and companies, they're literally the worst. Absolute worst.
By the way, VAT, I like you. So no problems over here. But the way they will if you miss something by like a day, they're like,
and they also come
VAT, penalty,
and
interest
they come up
on
with
it.
mad numbers. Like they will, you see, if you don't pay your corporation tax, from your profit, like you say, okay, they'll send you a fine. Oh, you didn't pay this, you didn't do that. VAT will magic some numbers from nowhere.
Say
be like, you owe $5,000.
Listen, the other day they sent me something saying, oh yeah, your VAT bill, because you haven't done your review, we've estimated it. It's 37,000.
Yeah, literally, they are the only department that will just magic numbers from nowhere. So literally, if you can avoid them, avoid them. By the way, the threshold to register for VAT, I had a conversation with a customer yesterday who thought that it was when you are turning over 90K profit. So he was like, oh yeah, I haven't made profit of 90K. I said, no, it's 90K turnover, as in
revenue,
whatever came in.
Bank.
I don't care whether your business is in minus.
Yeah.
As long as you have brought 90K in, you should be registered for VAT. You should have a VAT number. You should be charging VAT on all your services. So yeah, just to put that out there as well.
I think that's one thing that a lot of people don't actually talk about. Like, so for example, the serviced accommodation side of the business maybe being VAT rated.
Yeah.
That consideration is like, well, what does that do to your back end? What does that do to your profits? And is your business still viable?
Exactly.
Scale.
Exactly, because now it's either you take the price that you were charging before and add the 20%, or if you want to swallow it, then that means you're keeping the price, but 20% of that technically now belongs to HMRC.
And what are some of this? Because you got like the flat rate scheme, and what's the difference in the different types of schemes?
So I think the flat rate scheme is a scam.
Yeah.
HMRC, come for me if you want to.
Talk on it.
I think that if I explain the way the standard rate scheme works, then I'll explain how the flat rate scheme works. Then you'll understand it better. So the standard rate used to be, I've got it doesn't have to be property, any business. I'm registered for VAT. I used to sell it for £100. Now I'm registered for VAT. I add on 20%. I charge my customer £120. The £20, I add up all my £20 from everything that I've done. And then I also say on the other side, okay, as a business, I bought this, I bought that, I went here, I went that, and I was charged 20% VAT. So let's say I spent another £100, for example, and I was charged 20% VAT. Those two £20 would cancel out, because what they would say is, okay, yeah, you've collected 20% VAT, which you were supposed to give to us, but we see that you also paid 20% VAT, so there's nothing there. Most times, especially for businesses that have large expenses, and when I say large expenses, I mean capital expenditure, like you buy a lot of machinery, gadgets, that kind of stuff. What actually happens is that if you spend enough, you actually get a refund.
Rebate, yeah.
So a lot of people, especially construction industry, you can imagine, a lot of people were getting refunds from HMRC, or you could work the numbers so that you could make sure that you get a refund, basically. So HMRC are like, okay, rather than us just giving money out, because the whole point of this scheme was not to give money out. It was for them to pay us, right? So they've now said, okay, well, let's do the flat rate scheme. So what the flat rate scheme says, okay, you still have to charge 20% to your customer. So you still charge £20, you still charge 120. But rather than giving us £20, what we'll say is, don't worry about calculating all the VAT that you spent over here, even though you might have spent more. Just give us 16% or 13%. Or 14%, whatever number it is, depending on your industry, just give us 16.5% of all of the 20% that you've collected.
So they're basically saying, look, they pitched it like, don't worry, don't stress. We're even going to save you 3%.
Yeah.
And it's just, I guess.
But let me tell you where they're really, if you don't understand, if you're not good with numbers, you might miss this. You think you're even getting 3%. Don't forget, you charge 20% on £100. So you charge £20, 120. You see that flat rate scheme? It's not 13% on £100. It's 13% on 120. So they take the higher number. So they're even that 3% that you thought you were saving, they're actually eating into it.
That's your gross percentage. Your net percentage is lower.
So they, like I say, if you're a numbers person, you get it, and you can see why they've done it. And the only reason why I could say someone in HMRC would sit there and do that is because obviously they must have been making a loss, and they've realized, actually, what can we do to try and get more money back, and how can we spin it?
And is it optional though, which one you go with? Or
So a couple of years, so let's say about 3 to 2 years ago, when I would register my clients for VAT, I could choose. Now they've taken away that function. Yeah. So the more recent VAT type registrations I've been doing, they've been insisting you fill in the form and they'll tell, okay, so yeah, we've given you this flat rate. So you don't have that option. And the other reason as well, I don't want to say to be fair, because I think it's a scam, but in their defense, the other reason as well why they're trying to do that is because they want to automate. So I'm sure you've heard of making tax digital.
Yeah.
So HMRC, again, we already know, very ancient department.
Yeah.
they do very manual things. So in trying to come up to the 21st century and be more technologically inclined, they want us to use more systems. So to use more systems is always, of course, easier as well to just have that flat rate, because it's just like sales times a percentage and then give it to us. So yeah.
I think that's how they get you. Like, say for example, they'll tell you, we've brought in this new scheme to make it easier, but where's my money?
Exactly. Why now I can't get a refund? Because you're not ever asking me how much I spent on VAT. Yeah. You're just telling me whatever I claimed, and I have to give it to you.
And it's a real shame for the people whose industry relies on the fact that actually, let's say somebody who, I don't know, like runs a construction firm, you have to charge your clients VAT, but also I'm buying all of this material on the basis that, VAT. So that VAT, generally people in construction work on 20% margins.
Yeah, exactly.
That effectively could wipe out the entire viability of a business.
Basically. And the truth is about VAT, regardless of the industry, is that the government really just they've just made us an extension of themselves, basically. It's almost like saying, you know what, you shouldn't do it, but cash in hand, right? If I pay you for a service in cash, you go and pay somebody else in cash. Like nobody's paying, because it's not recorded, nobody's paying tax on that money, right? Because it's literally physical money moving around, right? So they don't like that. What they've done with VAT is basically said, if your business is registered and it's above the limit, we're now going to make you go around and start collecting 20% for us.
And they do that with, CIS?
Yeah, Construction Industry Scheme.
Why have you turned me into the tax man? I don't understand CIS. Like, if I employ a subcontractor, it's now my responsibility to firstly so I'm now their mum or dad to make sure they've registered with this scheme. Yeah. Secondly, when I pay them, I now pay them and take the tax like I'm the government. Yeah, and I don't get paid for this service and then give it to the government. That's what I'm saying.
They've literally made us an extension of themselves.
Right, listen, I'm going to start seeing, but sometimes you just got to say, okay, I see the model. How can I pay this forward?
Exactly.
How can I make other people do what the government are doing to me? Because I can't be the only one.
Doing this, right?
Suffering in this way.
Yeah, that is a good question. And if I'm honest, I'm still working on the answer.
Okay, but when you do, we've seen obviously you're helping a lot of people, with their financial literacy and understanding their own numbers. Hopefully you pay it forward. Talking about things the government are doing, I don't know if you saw this, but like obviously the government, off the back of making tax digital, have also decided that the other thing they want to spend our VAT money on is investing in AI. Have you seen this?
No, I've heard vaguely. I haven't looked into it deeply.
So apparently they're now going to be utilizing AI to cross-check our, for example, our self-assessments, our tax returns against so all the people it's myself or other people being like, I did this deal and this is how I made 50K. They're going to be monitoring your social media with AI to make sure your tax return matches. You've claimed £24,000, but you've just bought a new Rolex and you appear to have spent a month in Dubai.
So normally we would want to welcome the government using AI, right? Yeah. We just talked about the VAT department being really ancient and HMRC being ancient. But again, it's so funny how the first place they want to be implementing this AI is to see how they can claim money back. Honestly, the more I think about it, the more I think about taxes, even as an accountant, the more I'm just like, these people are literally just trying to suck us dry. And now, like you say, they're trying to even make us pay for the technology that's going to come and find us out.
Yeah, for the tech. You're seeing they're giving out rewards for snitching. Have you not seen this one?
I didn't see the rewards.
That, you can get rewards if you know a business that they're not paying their taxes. You can get a reward.
No, I missed that.
Because I know in America, I think you even can get 1% of the amount they. So you're on the payroll.
What?
1% if you go.
Why don't they do that for benefit scams? Well, to be fair, there used to be those adverts back in the day.
Yeah. If you see someone, you know what you can do it for, and this is how I found out. The one, for those that follow me, they know that I wouldn't say I'm partial, but I'm very good at collecting parking tickets. I found out these private ones, they pay people a commission to send them pictures of me parking. So if I park somewhere in a random private car park, because I saw, when you got to see the evidence. I see the guy in the reflection taking it. Just a random guy.
It's not even.
It's not it's not a warden. It's not an officer.
There's this random guy. I can't remember his name on socials. He rides a bike.
What's his Cycling Mikey.
Yeah, and he goes around telling people that they're making an offense against whatever the highway code and reports them. And does he get paid for that?
Yeah. He's reported and been paid for over 150 of it. He's got over 150 people points on their license. Apparently he's reported so many, they've actually stopped taking reports from him.
Do they pay him though?
They pay him.
Apparently so. This country is just getting out of hand.
And I think it's like, if you watch like kind of older sort of sci-fi films, that's the direction it was, like kind of very much like citizens arrest, everybody taking pictures, everybody recording everything.
That's why everyone's moving to Dubai.
Yeah. What are your thoughts on that, about the sort of max exodus of the entrepreneur?
Honestly,
let me pause the video for a quick word from our sponsors. Now, let me put you onto something that could seriously level up your property game. When I started investing, I didn't fully grasp the benefits of using a limited company structure. But here's the deal. Over 75% of new UK investment properties are now purchased through limited companies. Now, why? Because it's a more tax efficient way of purchasing. You can claim your mortgage interest reliefs, benefits from lower corporation tax rates, plus it sets you up nicely for scaling your property portfolio and passing on wealth to the next generation. Simply put, it can help you increase your margin. Now, setting up and managing a limited company might sound daunting, but that's where GetGround come in. They handle the entire process for you, from setting up your company in days to managing your accounts and tax returns and ensuring compliance, all under one roof. They even help you find financing to help you fund your investments, your own dedicated consultant, and a completely digital dashboard to track and manage the performance of your investments. But because I'm serious about giving back, I've got a great offer for you. GetGround is offering a free investment consultation plus 3 months of free accounting and tax services when you sign up through my link. Now, this is a huge opportunity to get started on the right foot. So if you're serious about building or optimizing your portfolio, then check out the link in the description. Fill out the form for a free consultation and claim your 3 months of free services. Don't miss out on this. You can even transfer existing buy-to-let companies over to GetGround and still take advantage of the amazing offer. Now back to the video.
I don't blame anyone. If you look at the numbers, it really makes sense. Don't get me wrong, by the way, Dubai is very expensive to live in. Yeah. Obviously, you've got money from everywhere. So in the UK, obviously, most money is generated in the country and blah, blah, blah. In Dubai, you can literally be there and you're in a place and someone's got from Canada, someone's from America, someone's from the UK, someone's from Africa, all in one place. So you can imagine the amount of money even coming into the country is a lot. And that itself makes prices go up, right? Because the demand is crazy.
So I can give you examples of that. Like, so there's so much, particularly like post-COVID, so much money has gone into Dubai that like, so I've got a business registered over there. Like little things like the cost of like your Ajari, like your office or something like that, has gone up tenfold just because the demand for it is so high.
Is so crazy.
Everything like your visas, your this, the requirements. I think the amount of money you have to like retain in your business account.
Yeah,
all of these things they've stuck a zero on the end. Like not even a polite. Oh, it's gone up 5% or 10%.
And to be fair, right? Don't get me wrong. If I could move to Dubai tomorrow, I probably would. There's other reasons why I haven't, but I think that Dubai is going, not even I think, I've already heard it in the and like what you just mentioned about things going up, right? Eventually they will start to tax. So I think they're already doing things like the tolls on the roads and stuff. Yeah, exactly.
There's 5%.
Exactly.
I can't remember if it's personal. No, I think it's 5% corporation tax now.
Yeah, on businesses. And I think, but it's still quite large. So I think it's like if you earn over like $1 million or something like that. But what I'm trying to get at is that we didn't just, in the UK, we didn't get here today. Yeah. It's been a good number of years where we've slowly progressed to this point. It might not get as bad, but I do think that it will worsen over time. Not because maybe the Dubai people are evil or wicked or whatever, but I think literally just because of things like demand. Like the thing is, taxes and those kinds of things are also used to control, right? Because obviously if you make it more expensive, then it might stop some people from coming, if that makes sense. So I do think that it will get worse. But I don't know, and I can't say that it will get worse to this point. And there's other benefits, obviously, from a financial point of view, but then there's lifestyle benefits as well of being in places like Dubai as well. So you can't really match those.
Yeah, I think like my background is economics, so supply and demand is like what underpins my entire thought process to everything. So, it's like just the basics of like, well, of course, it's like over time.
Yeah.
If we need you to come, we have low demand.
Exactly.
We're going to increase like supply side factors to make sure you come. At the point in which everybody's here and we have high demand,
we need to do the right things to bring it all down.
To bring it all back down.
And that's why a lot of people are also moving to places like Saudi. So like neighboring and Abu Dhabi, like neighboring places that are close enough, still have the same kind of vibe, but not quite like Dubai.
Yeah. And it is like, there's a lot of people that are moving to different areas. I personally, like, and I'll say this, as much as I saw something the other day and this kind of thing made me sick. It was just like, because I'm always like champion in the UK. I'm a proper Londoner. Like, as much as, I know you don't live in London. Boo, outside, you've gone. I'm a proper Londoner. I really like London. I've been loads of places.
Well, but
it's debatable, isn't it?
I just moved not that long ago.
You're not a Londoner.
I was raised in London.
A Londoner.
I was.
Now you're London adjacent.
But I think like a Londoner.
Fair. But like I was saying, like, I saw this thing and I was like, as much as I'm always fighting for, it's good, I really like it here. It's like, someone just said, in the UK, you don't start earning money for yourself until April. Like everything before that, that's just for the government. You're working for free for somebody else. I said, that does not make me feel good.
It is what it is. But do you know what? I always say to balance it, and I think I've said this on other podcasts, right? I will be the first person to absolutely say, not just London, but in the UK generally, for all the tax that we pay and all the whatever, we have one of the most stable economies in the world. Like, and I say that because as a Nigerian, if you're familiar with the
naira,
exchange rate and the naira, or places like Zimbabwe, like you literally cannot plan because the money is not making sense. But in the UK, you know what a pound is worth. And don't get me wrong, yes, there's inflation and all of that, but it's controlled and it's measured. And then there's other things like safety, police, and police, anyways.
But it's really,
there's other benefits, basically.
And I do think a lot of people, and we're gonna go, but I don't mind we go off topics. I'm just a chatter, I'm just a chatty man. But like people like bash the UK a lot in terms of the police and this and racism. But I'm like, a lot of it comes from a lack of exposure to what it's like elsewhere. So what it would maybe be like experiencing police in Nigeria, police in America, police in Dubai, like police all over the world.
Exactly. I would 100% agree with that, because even if you're not having direct interaction with the police, just the fact that we know there's a police system, you can call 999, you can get taken to court, blah, 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 actually makes people behave. In countries like Nigeria, where unless you personally know the police officer or the police, whatever, DPO as they might call them, you ain't calling, there's no number to call. Or the number is like, you know how you would call your friend on 07, blah, blah.
Yeah.
It's a long number. Yeah.
John.
It's not. You're not calling.
The armed robbers are here.
Literally. And they will not come. So.
And like I say, it's the court systems. And that goes to, look, don't get me wrong, like there's a lot of things that are really safe in Dubai. And things have improved massively. There's also people that have had really hard times, particularly when it comes to the court system, where it's like, it's who you know, not who was right.
Yeah.
So I think,
it has to be balanced.
Yeah, I'm a big advocate for. I've traveled to like I think 50 plus countries, and I haven't found somewhere that I was like I would rather live than here.
Are you kidding me? Wow.
No, because you know what it is. Like I've been blessed enough that I've been relatively successful, and a lot of that comes from the protection of, like, you know, when things go wrong, like a European legal system when it comes to property rights. Even like when you look at the rest of the EU, like countries like Spain, France, Portugal, Greece, Cyprus, there were issues where, you know, foreign investors' property rights were just stripped, and they were like, we don't own that anymore. Like it happened with loads of things throughout time. I
think personally, as an ex-Londoner, UK person,
London adjacent,
London adjacent, I'll be honest. I used to say growing up that I'd like to do like a 6 months on and a 6 month off.
I don't mind.
I love the UK in summer, especially like with the long days, all of those kind of perks and stuff. And I'd love to like just go somewhere in the winter basically and come back, because talking about all these people that are moving to other countries, Dubai, wherever, and even what you said about, you know, traveling, because of the economic stability in the UK, I see, and you already know, and we all know, that there are people who even in their countries want to come and invest in the UK. So I 1000% believe you should have roots in the UK. And that's one of the things I say to people. Before you move, you should be putting roots down in the UK, because even if you move permanently or you want to come back or whatever, it's quite likely that your asset will still remain. Like you say, you've got the rights. It's unlikely that things will just, one government official will just come and take your house. In Africa, you hear the government said, oh, we're putting a road here.
Look,
all houses gone.
What I would say is, look, think about it like this. In the UK, you are described as a landlord. We have and as much as you might be worried, like for me, property is always like my idea of I can't go broke fund.
Yeah.
Once you own it, it's there. Like as long as you look after it, you do your compliance side of things. The reason, as much as they bash the landlord and, want to kind of impact how successful you can be, one of the reasons why you should feel even safer is we have a House of Lords. Like, in terms of the backing of the lords and ladies, the landowners, you are effectively
one of them.
Again, you're lord adjacent now. Your assets are linked to the people that effectively have a lot of the power. So when you look at, like, let's say you had a business, I don't know, in crypto, it's new money, like new money stuff. All of a sudden we can change laws. Crypto can now be taxed. That you have to now provide ID.
They are
and all
trying
these
to
other
do that,
things.
by the way, aren't they?
Yeah, taxation on crypto. So question. So like talking about like taxation systems, in terms of, you went very viral talking about the UK system, but how would you say we compare to like maybe if I use two others like American and maybe like the Scandinavian Nordics where they tax even higher?
Yeah. So I think UK is still one up there with like one of the higher tax rate systems. I'll be honest, I'm actually doing a course on international tax because of all this movement. I was like, you know what? I can't afford to just know the UK because of questions like this. So I'm still learning that. But what I would say just generally, even with America, I believe they are taxed slightly higher as well. However, they are also paid better. So I've always given the example of like nurses in the UK and nurses in America. So I have family in America and some of them are nurses. The way they spend dollars is not the way the nurse in the UK spends her pounds or his pounds. Like the money in the US just flows more. So yes, there's a higher tax rate, but there's also just generally more money and more expenditure. So you don't feel as restricted. Whereas I feel like in the UK, they pay you small and then they tax you more. So it's like a double effect. One of the things I've also been saying more recently is that the tax thresholds need to adjust. So things like one of the reasons why that podcast...
What would you do? What would you change?
So one of the reasons why that podcast went viral was because many people didn't realize that after 100K, they take away your personal allowance, right? That 100K mark as an income mark used to be like, oh, if someone earns 100K, they're almost like a mini millionaire. But that's like maybe like 10 years ago. With all the inflation, they have not once adjusted those. Even the fact that you get 12,570 tax free, I feel like that should be 30,000 because if the average salary is 30,000 and you need about 30,000 to survive, then I think that you should give people the money that they need to survive, if you get what I mean. And then we can start taxing above it. And so we can look at different rates. Again, even the 100K mark, like I said, it used to be like the person's a mini million. Yeah. That needs to definitely at least go up to 150K, if not even 200. Because if you really want to look at the percentages, what 100K could buy you 10 years ago cannot buy you that now. So we need to find out whatever it could buy us 10 years ago, how much does that cost now? And then the tax thresholds needs to be adjusted to that.
Do you see like real life examples when you see like an A class used to be like 12,000, now it's 32.
What?
Like
an A class?
I can't remember. It's like an A class. I'm looking at an A class, 32,000.
Yeah. So
for a Mercedes
exactly.
A class.
Like, so then how much is a C class gonna,
and all of these things.
It literally doesn't make, and that they've literally done that intentionally. And that is actually another form of taxation. So without them explicitly saying, oh, we're going to change tax to 50% or 60%, what they've just said is no problem, you guys stay with your rates. We know that prices are going up, gas and electricity are going up, but we're not giving you no more tax-free money. So indirectly, they're taxing you anyway.
And I think that the reality problem is also because a lot of first world economies are struggling with the globalization that we can't compete with production in, China and the Far East. So that we're trying to pretend like everything's okay, but really the bank's pretty empty, which is why as much as, a Labour conservative government would love to be able to lead the manifesto with everybody gets their tax-free allowance, It's like, who's paying for that?
Furlough. We're still very much paying for that.
Don't even I still think that whole thing was like,
I feel robbed because I didn't get no furlough. I worked my butt off during lockdown.
I furloughed myself as self-employed. I
Well.
was furloughed. I was into furloughed. Can I give you some of my ideas in terms of taxation and from a tax professional? I think you shouldn't be taxed, or I definitely think, regardless, you shouldn't be taxed if you're under the age of 18. Because if you can't vote, I don't think you should be taxed.
Yeah. Do they tax? I don't think most under 18-year-olds are in education, so therefore they only work 20 hours a week. So most times their salary is not in the bracket to be taxed anyway.
Yeah. Maybe then push that up to, I feel like even maybe up to 21.
Yeah,
then.
I think so. Because uni finishes at 21.
So yeah, I think that was it. Yeah, if you allow tax-free up until the age of 21, it means if you want to go to university and do higher education, amazing. But if you want to start working at a young age when your friends are still having fun, make there a benefit so you can set yourself up, particularly if you've gone down the route of, internships or like apprenticeships and you're learning the trade from early on. I think aside from that, I think, like you said, like definitely for the younger generation, there should be tax-free. Outside of that, I'd say either like a tax-free threshold of up to a certain point, and then
nothing less than 20 grand. But I think 30k should be. But I know I'll be ambitious, but nothing less than 20 grand.
And then I think, but to balance it, like just have like until you get to, like you said, something like 250, like money that's serious money, just have like a blanket tax. If you want to do blanket tax of 30% from this, like so say tax free up until 30, and then just blanket tax up to 250, because it incentivizes you to keep working harder.
And that's the thing. That's what I was saying, that the UK system basically, it's like, we'll give you enough. We're happy for you to have a little bit, but we don't want you to have too much, which is why things like when you earn more, you're going to now be taxed higher. Basically, a lot of people just like, well, what's the point? Personally, I tell people, once you reach 100K, any other money that you want to be earning, I don't think you should earn it via 9 to 5. I think that you should go and open up a business, because what's the point of working, losing your personal allowance, then you're taxed at 40%, potentially even 45%. It's really not worth it, especially for all the stress they'll probably give you in your workplace and all the responsibility. You might as well channel that to the money that you can control.
And it's just like I said, like there's so many things that change all the time. Like, so even like as a business owner, you used to be able to use like retained profits to go and get a mortgage. Post like they've made that a lot harder now in terms of like going to get your residential mortgage.
And that's because I feel that the UK does not incentivize business owners for the very same reason. Because when someone owns a business, they have more control over their finances. Whereas when you're an employee, they can change the NI rate tomorrow or the tax rate tomorrow. And trust me, that thing will feed through to your HR system. Money's gone. Like there's nothing you can do about it.
They'll change that on Monday. By the end of the week, they're backdating it to Monday.
Exactly. But with business owners, there are things that you can do, eligible business expenses and stuff like that you just can't do as an employee. So they want to keep the majority of people as employees.
That's great. I've really appreciated having you on. Because I sent you these questions before. Out of these, I think there's 17 questions on here. I've asked you one. But, this is just me. I'm Mr. Free Flow. But we may have to get you back on because there were so many things that we wanted to speak about, particularly around Benny Ratio and why you set it up and how it's gone.
Yeah.
But for those that haven't reached out to you in the past, how can people find you?
So you can find me on socials, obviously website and all of that. But Benny Ratio is BENIRATIO, Benny Ratio, and then finances. So Instagram, TikTok, all the places. Send me an email, whatever, courses, one-on-one classes or one-on-one conversations, questions about your tax, you can reach out and myself or the team will help you out.
Amazing. Well, I think because of my lack of organization, we are going to have to get you back on and we're going to have to make this a double banker episode where we do a further deep dive, because making money is great, but saving that money and keeping it in your pocket is even better. If you've enjoyed this episode, make sure you subscribe, like. If you've got any questions for the follow-up episode, let us know in the comments section. We'll be back next week with another episode. Peace.